everybody. Thanks for tuning in. Hey, we want to give you some information about the do's and the don'ts for mortgage lending. And some of the things we really do want you to do is we actually do want you to use your credit cards. We want you to use your credit cards, but no more than 30% of the highest limit on that card. So if your card limit is $1,000, we don't want you to spend more than $300 each month, and then we'd like you to pay it off. So the usage of your credit cards is actually a benefit to you. It actually gives you better credit score history. So be sure and use your credit cards, but do not spend more than 30% of that limit. Second thing that we do want you to do is we do want you to save money for reserves and closing costs. Now each loan is different, and there are credits that can be given towards closing costs, not only from the seller but also from the lender. But we don't want you to be really just using just a down payment and liquidating everything that you have. Some loans require reserve requirements. So be sure when you're saving that you're saving for more than just your initial down payment. The one thing that we do want you to do is we want you to be completely honest about any other additional liabilities that you might have. Some people owe the IRS on taxes, and when they do, they have a monthly payment that they have worked out with them. That must be included in your debt-to-income ratio. It does affect your qualifications, so really important to be very upfront with us, telling us all the information so we can clearly guide you to the best path to your home ownership. So some of the things we don't want you to do. We don't want you to change from a salaried employee to a commission-based employee, because what happens is that the lenders require a 2-year history of earning commissions in order to use it. So it's not a good idea to change from a salary to a commission-based product, or I should say job. The other thing we don't want you to do is if you're assuming that you just started getting some bonuses and wow, that's going to help you qualify. Not so true. They do require 2 years history on your bonus income. So again, be very careful. Any changes with regards to your employment, make sure you discuss it with us before you make any changes. We want it to best benefit you when you go out to purchase your new home. One thing we don't want you to do, even though it's a really nice thing to do, but not so good for qualification, is being a co-signer. If you co-sign for a loan, you're responsible for it. So it's counted in your debt-to-income ratio. So if you are thinking about helping someone out of the kindness of your heart, and it is during the time that you're interested in purchasing the property, we would suggest that you not do that. It doesn't work to your benefit. Last thing is, don't go out and buy a bunch of furnishings and window coverings and things to decorate your house with until after we've closed your loan, realizing that any liabilities that you create prior to purchasing your house will need to be counted in your debt-to-income ratio, which could affect what you can qualify for or what you might already be getting financing for. So be very careful not to do that. So we're really thankful that you tuned in. Fill out the form and you'll find out more about how you might be able to buy down your interest rate. Give us a call. We can talk to you through the process as well. So be sure to fill out the form. Give me a call. We can talk about buying rates down and the do's and the don'ts. Hope you have a great day.